Hey guys, welcome back to the Another Excuse podcast, where we chat to founders, creators, and self-starters about how they started and where they are now. I'm your host, Byron Greeley, and today's guest is Arshad Chowdhury, the managing partner at Betatron Venture Group. Arshad currently works in venture capital at Betatron, but he has founded a few companies over his career. We discuss Betatron's investment thesis. We talk about the different hurdles and complications that he ran into starting his first business, Metronaps. And we also discuss health and longevity and why Arshad is a vegan and the importance of meditation. It's a wide-ranging, interesting conversation, as you can hear, and I really hope you enjoy it. I know I did. Enjoy the show. Hey Arshad, thanks for joining me today. Now, you started quite a few businesses and worked on many interesting projects, but before we get into it all, to get a bit of context, could you tell me a bit about yourself and what you're working on at the moment?
Yeah, sure. Thanks for having me on. So I'm a venture capitalist, a partner at a firm called Betatron Venture Group. We have offices in Hong Kong and Singapore. I'm in Singapore, and what we invest in are early stage, like seed to Series A, B2B asset light tech companies that are growing throughout the region. And typically they are companies that are incorporated in or have some sort of operations in Hong Kong or Singapore, and they're expanding in the region. The industries that we look at include things like construction, manufacturing, some large old school industries like logistics, maritime shipping, maybe the big boring industries, but that's what we like to invest in.
Great. So why pick companies in these particular industries?
So I think there are a few reasons as to why we're focusing on the geography that we're focusing on, the industry, the verticals, and the stage of company. I mean, what we're optimizing for is returns for our investors. And as a VC fund, you only have a few years in each fund, like they can be 7 to 10 years long, the duration of the fund. And in that time, you have to make your investment and then help the company grow and hopefully exit by way of IPO or acquisition. And South Asia is definitely a hard market to do that in. There just aren't as many exits by way of acquisition or IPO as we see in other markets around the world. So one, just from that perspective, focusing on B2B is in some ways de-risking the options for exit, because the types of companies that we invest in are innovating in markets where there are large legacy players who would likely acquire rather than build internally. So that's one thing. And then second, B2B is in some ways a space where you have a little bit more clarity on the trajectory of growth. B2C is kind of like catching lightning in a bottle, right? Because it's trends, tastes can change very quickly. The consumer-facing stuff is challenging because you're also competing for attention, and that usually means performance marketing, right? That means people are investing, like the startup founders are investing in platforms like TikTok and Instagram and Facebook, and they're not really in control of the costs. Those costs can vary dramatically. So we like the efficiency that we see in B2B companies, especially with enterprise sales. And then, as an investor, I have to understand my own strengths and my own capabilities. And I grew up in the United States, but coming to Asia every year and seeing the rise of industrialist families that have gone to like second and third generation in ownership in markets like Bangladesh, but also Hong Kong. And today that's very much part of my life. My wife is part of a third generation company, which is a cement business operating in Bangladesh and Hong Kong and UAE. And so I'm seeing it firsthand, right? It's just all around me, seeing this rapid adoption of technology by these big old industries. And so when it came time to think about how I wanted to shape my thesis as an investor, I think that market made a lot of sense to me.
Yeah, that does make a lot of sense. And what do you look for in a company when you consider whether it's a worthwhile investment or not?
Right. So we're writing checks of like $1 to $2 million and trying to get like 10% of companies. So that actually means they're relatively young, right? These are like sub $20 million valuation companies. But today, the bar is quite high for getting a check from not just Betatron, but really from anybody, because companies need to show that they have traction, right? They've actually got something. It's not just an idea, that they've been able to grow pretty quickly. So the pace of growth is incredibly important. If it's too slow, that seems like hard to make work in the short time frame that VCs have. And then, of course, you need to be a much better product than what's out there so that you're not in a highly competitive space, and you have some real advantages. You want some defensibility. And of course, the number one thing is the team, right? We want to invest in founders who we can work with over time. And, founder personality and appetite for learning, humility, these things are all really important when it comes to deciding who you're going to work with over the next 7 to 10 years, through board meetings, through, weekly or monthly calls and everything else. So all these things matter. This constellation of factors makes it really challenging to find the right number of companies. And on top of all that, we're looking for companies that are likely to be acquired, right? Because that's our primary goal. Is to invest in companies that we can exit and return money back to our investors in a relatively short time frame. So not only do they need to have a good company, a good product, they need to have a good team, traction, growth, but they also have to have a realistic eye on an exit. Who's going to acquire them? And in many cases, we want them to be on a WhatsApp basis with those companies that are already potentially thinking about acquiring them. We want them to have some acquisition offers. That's why in last year, we looked at 2,000 companies. We only invested in 2 of them.
Oh, wow.
So it's a really, really intense filter. So we are unlike a lot of VCs that might be more spray and pray, have a really huge portfolio. Instead, we'll have maybe like 10 companies, 12 companies in our portfolio, and we want almost all of them to see some sort of exit. So it's more concentrated.
Yeah. Wow. That's amazing. And from a business perspective, is it always a good idea to look for investment?
So if I'm a founder, and I'm thinking about when to look for investments, I think that there are a lot of things to consider. Like, one is, as soon as you take money from other people, there's a whole bunch of complexity you've just added, bunch of noise. You've got to send reports. You've got to be kind of financially buttoned up. You can no longer treat the company as your own piggy bank. You have your own rights to think about in the company. You can get fired. But you've also got to think about how to structure the deal. Now, as the VC, it's a little bit of an unfair advantage because my team and I are on this side of the equation when it comes to negotiating terms, like day in and day out, right? So we see a lot of these things and we know what works and doesn't work. Meanwhile, the founders only do that once every few years. So they're literally not as good at it, right? They might have lawyers, and their lawyers hopefully will help them. And we're not, we try not to be predatory in any way, and we always want the company to be funded and structured in a way that future investors will still be open to investing in it. But that said, it's complicated, and I think the right time to think about raising money, if you're really going to do it, is when you're stretched way beyond your limits. Like, you've got way more demand than you can handle. Customers are banging down your door to get your product. You can't hire fast enough. You've got just so many things your customers want you to build, want you to do, etc. That's when you bring in other people's capital. But I think If it's too early, like raising a lot of cash early on just to build something, like if we build it, it will come. I think that is a riskier proposition. And, that kind of equity is pretty expensive because with each round, you're going to give up like 20 to 30% of your company. So you can only do that so many times, right? Before you have very little equity left in your own company. So I would say it's not an easy answer. In most cases, most companies should not bring in any outside capital if they can help it. And now that makes it a really skewed, unfair game for entrepreneurs. Entrepreneurship today, no one should get it twisted, especially tech entrepreneurship. It is a rich kid's game. It costs thousands and thousands of dollars. Forget about the opportunity cost of the job and the income that you're going to forego. But then to hire just 3 to 5 people on the technical side to build something, if you're not technical yourself, you're going to pay them like $10K USD a month, right? Now you're talking about a $30,000 to $50,000 a month burn before you've even built something. And it takes months to get something built. And so you could be looking at 6 months, 8 months, even a year before you're really monetizing something. So $500,000 later, you might just be getting to market, and now you've got to market the thing. So it is very expensive. It takes a lot of time. So the unfair reality of tech investing and tech entrepreneurship is that the people who have the greatest advantages are the ones who were born with greatest advantages, right? They can tap their network for their friends and family for that seed capital to raise that first $500,000 to even $1 million to just get started. And so if you don't have access to capital, then you need at least a couple of other things, right? You need, every startup needs access to capital, expertise in the business, so like the product, and then you need somebody who can build, right? And sometimes that's all three can be in one person, right? And that's rare. But usually it's like any team will have like maybe one person will be able to both sell and be the head of product, and another person will be the technological person. But no matter how you slice it, it is an expensive use of your time to start a startup, and the failure rates are incredibly high. So putting it all together, it's kind of a rich kid's game.
Yeah, I don't think many people, particularly entrepreneurs and founders that are in the public sphere, speak about that aspect enough. Because people, they paint a sort of beautiful picture of becoming a founder and it's all sunshine and rainbows, but people don't realize that it's a lot harder just to get started, and you need like the aspects that you mentioned just to get started, and people think that it's more attainable to most people than it actually is.
Yeah, and I think the other side of that, though, is that you might not need 3 to 5 technical people anymore to build stuff. Today, there's no code, low code platforms. You can build on React and publish to both app stores, multiple app stores at once. You can test lots of things fairly quickly. And, setting up Amazon EC2 servers, that stuff has gotten a lot easier, less technical than it was 5 years ago, certainly less expensive and time consuming than it was 10 years ago. So the balance there is that you can do a lot more yourself today than ever before, especially if you're willing to dive in and learn and be hands-on.
Yeah, I agree. And I'd like to unpack the 0 to 1 phase of a business a bit more. Would you consider that this is the hardest part of starting a business?
Actually, I don't think so. I think the 0 to 1 is a time of real freedom because you don't have a lot of baggage at that stage. So if you literally are starting with nothing, you get to choose the name of the company and who are you going to bring in to work with at first, and even the nature of the product, and that can change day to day. But fast forward a year or 3 years, and suddenly you have employees, you have technical debt. It's a lot harder to change and pivot. And so the first year, that 0 to 1 is a magical time, an important time to get it right and to be really open-minded about what is working, what isn't working. But yeah, I don't think 0 to 1 is the hard part. I actually think 1 to 10 is probably the really hard part. And by that I mean like $1 million to $10 million can be very, very challenging.
Yeah, right. And you mentioned that many startup businesses fail. Do you know off the top of your head how many that really is, just to put into perspective?
It depends on how you define startup. If they're venture-backed startups versus, like say restaurants or bakeries and everything else. So it's a pretty wide range. I think what's commonly kicked around is that it's like a failure rate within 5 years is up to 90%, even for venture-backed startups. But I could be wrong with that. What I've seen is if in the venture-backed world, in the B2B space, it's not so much failure that we see. It's more something in between, which is like kind of a zombie, a walking zombie. So companies will reach a point where they have a certain number of customers. They're paying their bills. They're maybe breaking even some months and not other months. They're sort of struggling to make it by. They've still got conviction, but they don't see paths to grow. And that is the hardest because that's where you lose like 5-10 years of your life. And for investors who have backed those businesses, it's really hard for us to see our money again. Like we have no exit. That's actually the more common one. And that's also where understanding the founders from the investor's perspective, like my perspective, I really need to understand the founder's perspective, right? Is the founder thinking really broadly? Is the founder thinking he wants to build not just a $1 million a year business, but a 10, 15, 20, $100 million business? Is he thinking about, or is she thinking about IPOing the business? Does she want to acquire other companies along the way? How big is this person thinking? How big is that vision? And actually, those are the people that we want to work with, the people who have the big, crazy, hairy visions.
That's so interesting. And does that stagnation normally occur due to internal factors like lack of motivation from the founders or the team's not right? Or does it normally occur from external factors like the demand sort of plateaus and you can't grow from that aspect?
It can really be a bit of both, right? And we've seen some founders who have built a decent business, could grow much faster if they wanted to really lean into the discomfort of that growth, but instead they've gotten really comfortable with where they're at. And that is very much about the founder's proclivities. In other cases, there's certain market dynamics, competitive dynamics, pricing dynamics that just prevent real further growth without a massive infusion of capital to allow for marketing and things like that. So if there's a low margin space and maybe you're making just enough to cover your own team's costs, but it's hard to justify a large investment in growth of the team or marketing product. I think that's where the danger lies. So it's a bit of both.
Right. And see, like I mentioned earlier, that you've started quite a few companies and worked on some very interesting projects. How do you decide whether an idea is worth pursuing from a founder perspective?
My first business was really one that was born out of a serious passion. And it was a funny passion. It was like, I really love taking naps. I think a lot of people love taking naps, but I was 22 years old working in an investment bank at Deutsche Bank in the World Trade Center in New York. And I was, getting paid a decent amount, going out and not sleeping much at night, drinking and all that, and then having to show up at work and be there all day. And I was always tired. So I thought, we need a place to take a nap here in the World Trade Center. And I went to business school with the idea to set up a napping center. And it was in 2001, of course, that I got into business school. And September 01 was when the World Trade Center disappeared. And so but I stuck with that plan. And it was really this thing that I needed to bring into the world. That was just a passion of mine, right? And eventually it did launch. And that company called Metro Naps just turned 20 years old last August. It's still running, privately held, profitable business. And I'm no longer involved. I was a founder and CEO there for the first 5 years. And my partner, Christopher Lindholz, he took over the business as I left to go into software. And he's done a great job with the business ever since. But you can see over my shoulder, there's a painting of a gnat pod. So it's something that's like near and dear to my heart. So you have to love it, right? That's what at least for me at that time, at that age, I had to love it to change my trajectory out of banking to go do that. But for some of the best founders that I've come across, they are acting on an insight about an industry that they know very well. And some of the best founders are actually not 22-year-olds. They're in their mid-30s, they're in their 40s, they can be older than that. And they come to the market with the unfair advantages of knowing exactly what needs to get built, knowing who the customers are. They have a team that they can pluck from their network overnight, and raising capital gets easier. So those are the types of teams that are solving problems that they've experienced in their professional lives, at least in the B2B world, that they're trying to solve. Like, those guys are the easiest ones to get behind, right? If it's somebody trying to solve a brand new problem that they had nothing to do with, they don't have any experience in the market, like, that's less exciting and less compelling.
Yeah, that makes sense. So you feel like there has to be slightly more to it, like that unfair advantage to see a better chance of success, rather than you just want to start a business and you're just looking for an opportunity. You feel like there's an opportunity, so you're just going to start in that, even if you aren't really interested in that industry.
Yeah, absolutely. Absolutely. And, there's so many opportunities in the world, and there's so many industries and so many nooks and crannies that are not obvious to people who are on the outside, right? So, we just finished a call with a team that has been making millions of dollars doing international banking KYC. And, the know your customer challenges, those are real. Everyone knows those are real, but people who have come from the banking world are really aware of what those problems are. Or in other cases, we've been looking recently at companies that are in the construction world, but they're looking at video analytics and using AI to see when safety breaches are happening. So if someone's not wearing a helmet, or if they're walking under something that might fall, or if there's someone in a danger zone. So I think those types of businesses don't emerge just out of the blue. They emerge from people who have industry experience.
Yeah, that makes sense. And when you decided to leave banking and start your first business, were there any fears involved? How did you get started with that?
Yeah, I mean, I was working in investment banking in New York, and it was a pretty good time, like 1998 to 2001. But I didn't see myself thriving in the corporate environment, and I think I knew I wanted to start my own business because I came from a family of largely entrepreneurs, a lot of immigrants from Bangladesh who made it in different industries in the United States. And that was kind of my role model. My dad was a cardiologist, and I thought, okay, I could be a doctor, but I didn't think I was cut out for that either. Like, I really didn't do well at chemistry and biology. I kind of felt much more at ease in the business world. And so I knew that I was going to make that transition anyways. But I went to business school. I don't know that people need to go to business school today, but at that time, I went to business school so that I could learn more about the process of starting a business. I knew I wanted to do that. I wanted to learn about fundraising. I wanted to learn about, like what it takes, what are the skills, because I really didn't know. And so for me, business school was a good pivot point. Now, that might still be the case, but it's so expensive nowadays that it seems like pretty hard to justify both paying for business school and starting a business. Seems like you have to choose one or the other, unless you come from a lot of money.
And throughout your founder's journey, did you run into any hurdles or complications when starting businesses? And how did you overcome them?
Oh yeah, starting a business in New York, our first store was in the Empire State Building, a place where people can come and take a nap. And in New York at the time, the Empire State Building was a a union building, but also had some overlaps with, it seemed like mafia. For example, when we went to the Empire State Building management office and asked them for recommendations for contractors who could renovate the office that we want to turn into our napping center, they gave us a list of 25 names. And when we called all 25 of those numbers, they all led to one of just two offices. It was a guy named Frank and a guy named Tony. And those were all kind of fake numbers that all led to Frank or Tony. So I had Frank and Tony come in and give me a quote for the first step, which is a demolition. That was at like 10 a.m. And by 3 p.m., I called both of them. I called Frank. I said, Frank, good news. We want to go with you. We like the quote. And we'll use you for the demolition. And he said, oh, I'm glad you said that, Arshad, because I've already demolished your space. And it was a little trickier than I thought. So it's 50% more than the quote I gave you. Oh, and I had my guys go down to the DOB, the Department of Buildings, and sign up for all the permits in our name. So all the work you're going to be doing there from now on, you're going to be working with us. And that was like my first foray into just getting destroyed by these intense New York contractors who were just like the line between legality and illegality definitely blurred. We paid like $19,000 for 3 wall sconces, just like lights in the walls. We couldn't do anything about it. You know, we were building these napping pods, kind of like what you see behind me in that drawing, and they were made out of fiberglass. We were trying to figure out who was going to build those, and we found a cool shop in Indianapolis. Indianapolis is where like Indy 500 is, right? So we started looking at who manufactured who designed bodies for race cars. And one of those fiberglass shops was the one that we decided to work with to design manufacture the first pod, at least the molds for it. And they had done most of the work. We paid, I think it was like $20,000 at the time to get that first mold done. And the agreement was if that first mold worked out, then we would build like 10 more potentially with them. So I got a call a few weeks after the whole thing should have been done already. And they said, well, we're not done with the molds yet. We're not done with the chair yet. If you want the chair to be done, you got to wire us another $20,000. And if you don't wire the money, I've got a sledgehammer here. I'm going to destroy them. You got by the end of the week to wire the money. So my partner and I flew that night to Indianapolis, which is in the middle of the country in the U.S. And got in a U-Haul. We use like the early version. This is like 2003, 2004, and we're using whatever Yahoo Maps, I think, to like find all of the fiberglass shops that they would have sent it to have the molds done. And the third one that we stopped at, we saw our mold basically through the fence, and we jumped the fence, stole our molds back, put it into the back of a U-Haul truck. We got stopped by the guy who was working there. We showed him the paperwork, and he was like, I just don't want to get involved. And then we had to drive back 14 hours with no music because we wanted to hear if the molds were getting tossed around, potentially cracking. And we drove straight to Long Island in New York, where we found somebody who could finally build the thing. So yeah, I mean, I had no idea how dirty the business world could be, especially in construction and manufacturing. That was my first and last hardware company, by the way. I got into software after that.
That's such a fascinating story. Do you think you were just like the odds were against you, where you had both in like two different areas, one in New York and one in Indianapolis? Like you had these guys who are just willing to like threaten you and try to rinse you of money, or do you think that's quite common, or was more common back then?
Surprisingly common. I think it's surprisingly common. The in markets all over the world, like in Bangladesh, for example, we've invested in a company that does trucking, and their trucks get stopped at every new town, and they have to pay a toll. But that toll is not to some government official; it's just to local gangsters who just run the place, right? So, especially in Asia, where you have so many different rules, laws, so many different levels of development. It's wild. And I think the U.S. We don't operate in the U.S. now, and the U.S. is all my investments are in Asia. But I think whether you're doing business in London, Ireland, U.S., like there is no place that is squeaky clean. It's just part of the business learnings. This is why you need to be really smart about your lawyers, smart. And now you've got things like financial fraud, which I think is the number one risk to any business today. We see deals frequently where some investor gets, while the fundraising process is happening, the emails get intercepted and there's a phishing scam. And it looks like all the CTO of the company, the CEO of the company you're investing in, it looks like they're all on the email. It looks like the conversation you've been having, but they come in and say, oh, we've changed the bank account. Here's the one we want you to send it to. And suddenly money disappears. So those kinds of phishing schemes are only getting more sophisticated. So I think that the lawlessness that I experienced was like face to face back then. Now it's more virtual, but I think it's also more common happening to individuals and businesses.
Wow, yeah, that's something I haven't considered. And did you make any mistakes along the way?
Oh yeah, I mean, the entire way. I still make mistakes, right? And I think, that's par for the course, but it also can be really, really challenging, in terms of maintaining your sense of, your abilities, your self-confidence. So I definitely made mistakes. Just say the Metronaps example. We should have vetted that building much more before we'd even set up camp in there. There are a lot of things that we didn't know what questions to ask. And so what I should have done is talk to at least like 10 or 15 tenants to get the lay of the land. I didn't do that, And then as you fast forward, I definitely I was surprised over time how much the interactions, every single internet interaction, is so sacred with every person, and how much they can vary based on our own management of our energy levels. So I remember once I had an investor, potential investor in one of the businesses I was part of, and I just alienated the guy because I snapped at him. Like, he was asking a lot of questions. I was like, look, I don't think you get it. And it kind of like got defensive. And it was because I was hungry. It was all because I was hungry. I was kind of tired, kind of hungry. It was a 5 p.m. call. I hadn't managed my energy. But every difficult conversation I've had, whether it's been with partners or with clients or investors, whenever it's gone bad, I look back, I'm like, my energy was off. I didn't sleep the night before. I was hungry. And I think it took a long time to realize how basic that stuff is, because it's table stakes to know your business. It's table stakes to know the numbers, be able to talk about your strategy, all of that. But building trust that's built, one interaction upon another. And you got to bring your best self to every one of those.
Yeah, that's such an important lesson. And in terms of mistakes, did your perception of them change over time? Because I feel like some people consider a mistake a setback and may even get disheartened from carrying on. But the people that are successful reframe a mistake and sort of learn from it and keep moving forward.
Well, I think your ability to react and respond to a mistake is directly related to the resources you have, like the emotional resources you have to look past it, but also how much goodwill you built with customers, other people, how much capital you have. So if you mistakenly went down the path of doing like tons of Facebook or Instagram marketing, only to learn 6 months later that none of it worked. Like the economics didn't play out in your favor. That's a huge mistake. And if you have the cash buffer to survive that and live another day, fine. You've learned. But if that's enough to sort of tank your business, then guess what? You've just destroyed your business, lost money for your investors, ruined your reputation, and a whole bunch of people who are relying on you just lost their jobs. So yeah, I mean, I think there's a lot of like sugarcoating mistakes and painting them as like inevitable lessons. And it's true. It is, and it's inevitably part of the business. If you're in business long enough, you will make mistakes. So there's no one who's successful or unsuccessful who just hasn't made mistakes, because we're all sort of making it up as we go along. But I think you can't be too cavalier about it. Can't dive into mistakes. Can't like look forward to making mistakes, then write it off. I think if you make like one mistake, okay, two mistakes, something's going on. And if it's three mistakes, then you've got to look deeply at yourself and maybe think about a different career.
Yeah. And what would you say are the most crucial factors critical to a founder or a company's success?
I think there's a lot of actual luck and timing involved, right? Because I see a lot of smart people who can communicate really well and who know their markets. Sometimes it really is about being in the right place at the right time. I met a founder a little while ago who a year and a half ago, her company was in the hiring space, and she's using AI to evaluate candidates. And when she first started, it was very hard to get traction with investors. Not too much change in terms of the underlying business, but as soon as ChatGPT was launched by OpenAI, the entire AI space got a lift, and her business definitely benefited as well, right? So, I think in the long run, we'll see how the business does, and I'm enthusiastic about that founder and the business. But in the short term, she definitely benefited from luck. So I can't say that there's any one magical characteristic. And actually, I hesitate to say that because there's a wide variety of people who do well, from what backgrounds they're from, their neurodivergence. Some people with ADHD, some people with dyslexia who do well. It's just very hard to say with certainty who's going to do well and who's not going to do well. But I can tell you what matters when it comes to raising capital, which is not doing well in business, but it is access to capital and buys you some more time, right? And in that world, one of the most important things is clear storytelling with conviction, but also a connection to reality. So if you say you have a thesis about what's happening in a market, and then you launch some small experiments, and those experiments prove the thesis correct, and now you have a plan to scale it up, and the unit economics tied to it, and you can tell all that story succinctly and clearly, and anticipate some of the questions that people are going to ask you, then you're going to have way more success than somebody who's unable to tell the story. And it's surprising how many people don't practice their pitch and make their pitch like really, really compelling. But I think that's just a top layer. We always will hear a company's pitch, but then we will go much further and not just talk to the founders. We'll talk to 3 levels into the company: the top, the middle, the newest employees. We'll talk to their interns. We'll talk to their former employees. We'll talk to their customers. We'll get to know the market from other angles. So, after a while, you can't really fake it. And it's not so much about the founder, but opening the door and having the conversation and getting to that stage of due diligence depends on storytelling.
And do you think that's a skill like learned over time, like being able to tell the story well and make a connection with possible investors? Or do you think it can be learned in a pretty short time frame, but you just focused and learn the right things to say and do and act?
I think the pitch itself can for sure be improved over time, like very quickly, for sure. But the other parts come only with experience, right? And those other parts are, 6 weeks into due diligence, you've been asked the same questions in 20 different ways. You are asked to redo your financial model. It's like 9 p.m. and they want it tomorrow. And you've also got to look at the legal documents, and you've got to defend your rights, and you've got to have justification for, everything from your valuation to liquidation preferences and everything else. That is not something anyone can coach you on, but something you get with maturity and time and patience. And that's where one's personality really shows up. If someone is humble, patient, asks questions, isn't reactive, all that stuff will come out in that process. So the best thing you can do is work on managing your inner energy, managing yourself, like staying cool, and taking each thing piece by piece and addressing each question, even if the question is kind of annoying to you or repetitive, with the same calmness, aplomb, patience. That's going to get you really far. And you don't have to practice that. That's just something you build inside.
Yeah. And why do you think so many people idolize becoming a founder?
I don't know. I think the Facebook, the movie, had a big impact. And I think the entire, I would guess that the entire software industry is very personality driven. If I say Larry and Sergey, you know who I'm talking about, right? But if I said the names of JP Morgan CEO and a couple of other company CEOs just by first name, you might not know. Most people won't know. So I think the personality driven aspect is probably one thing. And I think the second thing is there's I think online, there's a lot of noise about people running their own passive income businesses and how great life can be for them. And, and in my experience though, what running a business meant was, like in my family, my uncles, at one point or another, everybody worked. Even my aunts worked at Kentucky Fried Chicken, KFC. And the uncle of mine was a franchisee. He worked his head off, and he was working super crazy hours. He always smelled like chicken and oil, and it was really, really hard, super intense grind. Was he a founder? Yeah, he was a founder. He's a founder of his franchise, and that model is still kind of the reality. If you are the CEO, you're kind of everybody's bitch, right? Like the entrepreneurs are are responsible for everything. Making sure payroll is met and everything in between. So like all the details, and so if the trash isn't being taken out, like you got to do it. So I don't know why people idolize it. I think successful CEOs really are unique though. Like successful CEOs are in many ways rock stars, right? Because they have confidence, knowledge, ability to execute, and they have that personality that gets other people to follow them and put money behind them. So, I think that there are some good reasons why people look up to strong founders, but the day-to-day I don't think is very glamorous.
Many people consider becoming a founder as like the one true way to becoming financially free. Would you say this is correct, or are there other ways?
No, I don't think so. I think actually it might be like starting your own business might be the most efficient way to lose all of your own money and a lot of money and people around you, and tank your reputation and burn 5 years at the same time. So I think you need a lot of conviction to start a company, and you need insight as to like how to de-risk it. I think good founders actually are not that risk loving and have a real insight that they're acting on. So I think the best way to get financial freedom is work on yourself, have skills that are in demand in the market, have a good paying job, and look for higher pay, at competing companies. I think that's still a tried and true path. And then over time, I think over time, I think, aside from managing your work-life balance, which, is so important, you're going to spend most of your life working. So you've got to find a way to manage your work-life balance so you can enjoy it while you're doing it. Don't live for the retirement.
And speaking of enjoyment, what was the most enjoyable business you started and why?
Good question. Good question. I think one of the ones that I really loved is called Power 20. It's a fitness app. It's a passive income product that I still own. And we started off selling Power 20 on the App Store to people who want to do 20-minute workouts. And we later pivoted to we expanded to include 20-minute workouts for mothers who are expecting. And that's called the prenatal and postnatal workout. And that was really fun. And because for me, I was finally able to bootstrap a business, not have investors. It was just myself and a couple of people who I'd add as we went. I liked everybody I worked with. And the stuff we were doing was just really aligned with how I felt about the world. Exercising. I got to write a lot about fitness and wellness. And that was a transformational time for me as well, because that's when I was able to shift into thinking more about my health, about what I ate. I became vegan at that time. It was like, and I made exercising kind of like a daily ritual that I really treasure now. So I think that I was lucky, and that business is still running, privately held, profitable little business. That's one that you asked earlier, about businesses heading a natural sort of growth cycle. Well, in that case, we've tried to grow the prenatal workout app, but it's really hard to do it because it costs a lot to market and get customers. And anyways, your customers who are expecting moms, well, she's going to eventually have her baby and then stop using your app. So there's this natural churn of 100%. So you're on this constant treadmill, and it's hard to really expand that growth organically. So that business is a nice business. I take a lot of the revenue from that and I donate it to programs that are supporting moms, in New York. So I like that business. I like that it's up there. It's still performing that job, and it's unbalanced. I think it's good for the world for it to be out there.
That's amazing. And that actually leads me to my next sort of questions. I wanted to ask you some questions outside of business. And what you mentioned that you work out and that you're vegan. Are there any other actions that you take to remain healthy?
Yeah, I think starting with Metro naps more than 20 years ago, I got into the habit of napping every day, but getting yourself to nap within 20 minutes actually was my first introduction to meditation, because it's calming the mind and getting yourself to that state. And over the years, that has transformed into a daily meditation practice. So 2 times a day, 20 minutes, mantra meditation, really, really simple. And I do that with some stretching beforehand and usually some movement before that. So then I'm trying to eat whole food, plant-based. I don't drink any alcohol, kind of like you. Gave that up more than a year ago. And that really felt good to do because, letting go of alcohol, I was never a big drinker, but I've had 2 family members die from alcoholism. And, my relationship with alcohol has always been weird. Like I always felt kind of guilty about it. My parents don't really support drinking. We come from a Muslim family, but ultimately I realized that if there's this one thing that will undermine everything you care about, it's alcohol. Like I care about exercising. Alcohol makes it harder to get up and go to the gym. I care about being in shape. Alcohol makes it harder. I care about getting enough sleep. Alcohol makes it harder to do that. I care about, having energy at work. Alcohol makes that harder. I care about having my brain function well. And I care about not making a fool of myself in public and, not squandering cash. Alcohol undermines all those things. So once I let go of that, then there's this flywheel of just feeling great, the meditation daily with exercise and cutting out the alcohol and eating super clean. It just builds on itself. And what other people struggle with suddenly comes really automatically. So I'm turning 48 next month and I feel really good. I run sprints, hill sprints every other day. I just feel like there's not much, differentiating me now than when I was like in my early 20s physically.
Yeah, that's amazing. And how do you stay consistent with it all?
I think just by that, that flywheel builds on itself, right? So um, I think one thing is the alignment, right? Like if you're just vegan, for example, for the health benefits, you're not going to stick with it, right? You're not going to stick with it because there's too many forces trying to eat this, eat that. It's not that bad for you, blah, blah, blah. But if it's more about your ethics, like I don't really need any animals to die for me to thrive, um, then, I'm never going to pause on my ethics, right? So that's one thing, right? And then in the meditation, is very connected to the food I eat. If I'm eating something really heavy, it's going to mess with my meditation. If I'm drinking alcohol, it messes with the meditation. So, what's my North Star? Ultimately, the North Star has got to be something outside of us. It's my spiritual journey, and we're all on our own spiritual journey. I can't tell anyone what they should do and what theirs is. And it's unique to everyone, I believe. But my spiritual journey definitely involves going deeper inside, like sitting consistently by meditation and trying to really wrap my mind around sort of the oneness of other people, of of physicality in the world. That's hard, and that's something I like kind of do every day. And I think having that bigger North Star, trying to understand consciousness, where we go after this life, um, and how do we interact with one another, understanding this, if we really absorb the concept of unity, that I carry with me and all this stuff. And so that, as long as that doesn't wave, then neither does my commitment to keeping the vessel, which is the body, in really good shape.
Yeah, I agree with that. And in terms of keeping the vessel in good shape and veganism, some would argue that in terms of like the macros, you need certain amount of protein intake to be healthy and stuff. Is that something you worry about, or do you just eat what you want to eat, or do you pay
No,
attention
I
to that?
don't. People worry a lot about that, but I don't hear people worrying enough about the number one and number two killers, which are heart disease and cancer. And they don't talk much about like the lack of fiber in our diets or too much sodium in the diets. There's this bizarre obsession with protein, but nobody has gone to the hospital for a protein deficiency. But how many of us know people who have gone to the hospital or had to get a colonoscopy and had like polyps, or have cancer, or have high cholesterol, or have high, have high blood pressure? Those are the things we should be worrying about. And if you stick to a whole food plant-based diet, you're going to avoid a lot of that stuff. I mean, plants give us everything, right? Literally the air we breathe, the clothes we wear, the housing we've had for ages, the transfer of knowledge through paper. It's all been given to us through plants, and plant medicine is there for helping with spiritual journeys and spiritual learning. So it's easy for me to perceive plants as our friends. And while there are definitely potent toxins out there and stuff, but there's so many thousands of plants that are such a variety, that bring a variety of nutrients to us. I don't know why people are so hung up on just three types of food, like eggs and chicken and beef. Like, that's just so limited. But there's more plants that I see at like the farmer's market or at the wet market here in Singapore. I can't even name most of those plants, right? There's just a huge variety of them. So for me, I don't think about the protein, not worried about that. I haven't been limited in any of the things I can do. But then again, my goals are also just to be able to sit and meditate every day and feel good in my body and have energy. So I'm not really trying to be a massive bodybuilder. And I do think about longevity. I want to be here, for decades. And I have a goal to be the world's fastest, at my age group, 90-year-old age group, fastest 100-meter dash runner. And
Oh,
so
wow.
if I go through a regime of like eating tons and tons of protein now and bulking up and having like huge muscles, and I feel like I'm going to have joint pain probably cancer. I'm going to be overweight. I'm just not, it's not going to play well when I'm 90.
Yeah, that makes sense. I'd love to see that race. I'll definitely come to
Yeah,
watch.
you're invited.
Thanks. And I'm sure many people listening to this would resonate with what you're saying, but getting started, like you're on the flywheel and it's coming naturally to you. But at the beginning, like giving up alcohol or completely changing their diet, are there any like tips or actions that you'd recommend to just get started on that flywheel?
Yeah, I mean, forget everything and just start meditating. Meditate twice a day. Do whatever you can, 10 minutes, 20 minutes, and find the meditative path that works for you. You're just kind of unlocking bliss when you do it. And when you do that, you start synchronizing with your body. You start truly feeling what your body is telling you. You start hearing what your body is telling you. It becomes a conversation, and you become much more attuned to what your body needs. You will not be so, you'll see so many meditators who start with meditation and then later give up drinking, stop smoking. They just get healthier. It's just a byproduct. So of everything, I think the meditation maybe comes first. But for me, my journey was that I stopped eating meat more than 20 years ago when I read about the impact of the industrial animal industry on the planet. And that was when I was 22 years old. And then I stopped having chicken when I was in grad school because a good friend of mine didn't eat chicken. I thought I can do that. And then over time, it turned into, I had this one meal with my wife and her family. My wife thinks it was like the best meal that she's had. I'm vegan, she's not. But for me, it was like my last time on team carnivore. It was a lobster sashimi where the lobster was served to us still alive. And it's moving around and we're eating his body parts while it's looking at us. I just thought, maybe we're the bad guys. Maybe we're the evil aliens. Why do I have to? Why is this normal? This is twisted. So that was it. That was it for me. That was 8 years ago.
Wow. Yeah, that makes perfect sense. Arshad, before we end, I usually hand over the mic and ask if you have a question for me.
Yeah, I guess I do. Yeah, you've been interviewing a lot of people, and you have you've made a shift out of Asia to the UK. I guess you've done a bunch of changes at once. Where I guess my question is to you: where are you going with it all?
I think I felt stagnant in Hong Kong, and that this change was necessary. And like you said, a lot of things happened at once after that move. And I think that move caused me to take these next steps. It's like a bit of discomfort, new environment, almost the freedom to kind of like reinvent yourself in a way. And it was also just like the frustration with myself for not taking action and a self-identity thing. And where I'm going with it all, in terms of this podcast, I have no financial goals or anything like that. I think the benefits I get from having conversations with people like yourself is amazing. I mean, we've been in social settings and maybe a few of these questions may come up, but in group social settings, and what I found with friends and other connections is you don't get to go deep into the nitty gritty and get to ask all the questions that I'm personally interested in, because someone else may enter the conversation or direct the conversation some way that they're comfortable discussing. And so just having this platform to ask the questions that I want to ask with people that I look up to and interested in how they got to where they are is an amazing benefit, and I think really helps my personal growth. It's like a hack in a way. And to be honest, I just want to continue doing this. And I also have intentions to start my own business, which is why I started the podcast in the first place. And so that's where I'm at the moment. And
Thanks.
yeah, that's
I
what I
have a
intend to
follow-up
do.
question, which is
Yes.
related to health. You've always been super fit as long as I've known you, and also don't drink. What else? Is there anything else you've added to how you describe yourself on the health front?
Well, with you speaking about meditation, I never gave it that much thought, but I think me quitting drinking, although it was health complications, I think what helped me make the decision was kind of at the same time I started meditating, which is quite interesting you say that. I didn't actually reflect and realize that there was a sort of correlation between the two. And in terms of health, well, I still eat meat. I'm trying to build muscle. And I've started, well, this year is the first year I'm signing up for like a competition for High Rocks, which is like a CrossFit type thing that I'm going to do with my brother. And I think it's something to work towards because I've gotten the consistency of going to gym every morning under wraps. And I feel like that can get a bit stagnant. So breaking it up with having a particular type of event to work towards is going to be interesting for me. And I've never been a runner, so I want to do something slightly different to that. But yeah, the drinking is something that like I just don't do it now. That's what I identify as, and like I don't ever think of going back. And so yeah, it's slowly just I'm planning on getting a Whoop, and I just want to add on being a bit more introspective and learning more about my body and making those tweaks and seeing where I go from there.
Nice. And how's your meditation practice? Is it every day?
I try to do every day, but
Okay.
now that I'm trying to consume like 3,500 calories a day,
Well,
and like fitting into my routine. I now make a smoothie when I used to meditate, so I'm trying to like reorganize my morning routine so I'm able to fit in some meditation. So yeah, I'm in the teething phases of that, but yeah, my intentions are to do it every day.
my one meditation hack for you is set an alarm, wake up at 4 a.m. and sit up in bed and do a 20-minute meditation session and go back to sleep.
Oh wow. Oh yeah, I've never considered that.
It feels great. It's so quiet. There's nothing going on in the world. And there's something magical and spiritual about that hour.
Yeah, I can imagine. I'll definitely give that a go. Thank you. Thanks for joining me today, Arshad. I really appreciate you taking the time to have a conversation. But before you go, if people want to find out more about you, Betatron, and all the other projects you're working on, where can they do so?
Yeah. Well, Betatron's website is betatron.co. And I also have a website where I have my own writings at Arshad GC on Medium. So you can type arshadgc.com and that'll take you to the Medium page. And if anyone listening to this is looking for funding in the B2B space, operating in Asia, or if they know anyone who is, certainly send them our way to Betatron.
Great. Thanks, Arshad. Thanks for listening. I really appreciate you making it all the way to the end. I hope you enjoyed the episode. One more quick reminder before you go. I have a weekly newsletter by the same name, Another Excuse, where I cover 4 topics: something that has changed my perception, a tool that could be useful to you, content that is actually worth consuming, and a concept that I try break down and explain. If this sounds of any interest to you and you need a kick up the arse, then you can subscribe at the link below. Thanks for joining me again, and I'll see you next week.